Hello everyone, I'm Chris Kapches, President of Chestnut Park Real Estate. I'm here today to give you your August market report for the Greater Toronto Area. The housing market is in a very peculiar place. The data is very clear. Sales are down. They're down by almost 34% compared to last year. New properties coming onto the market are up slightly. The total number of active listings are up fairly substantially, almost 62% compared to last year. The one thing that has stayed the same year over year is the average sale price, which has come in at $1,079,000. It was $1,070,000 last year. But the real story is not the data that I've just given to you. The real story is what's happening as far as inflation is concerned and what the Bank of Canada is doing to combat it. In February and March of this year, only a few months ago, the average sale price was $1,344,000. It has dropped from $1,344,000 to the number that I just mentioned, which is $1,079,000. So on a year-over-year basis, the average sale price looks fairly stable, but in fact it has come down about 20% from its zenith, which was in February. And the reason for that is that since March, the Bank of Canada has continually raised its benchmark rate. Back in March, the benchmark rate was 0.25%. As we speak, it is now 3.25%, a very, very substantial increase. So what has happened is housing has become less affordable. Yes, less affordable today than it was back in February when the average sale price was $1,344,000. It's less affordable because the increase in the bank rate and the increase in mortgage rates that people have to pay have gone up exponentially higher than the drop in the average sale price. In addition to that, there's the stress testing that continues to take place, so people have to qualify at even substantially higher levels, in some cases over 7%. So it's those factors that are driving the housing market. And of course, even though it's not within the realm of this market report, are having a terrible impact on the rental market, where rent rates have gone up by almost 25% on a year-over-year basis as people flee the resale market because of its unaffordability and are looking for some sanctuary in the rental market, are discovering that everyone else is doing that as well. So units, when they become available, prices are going up, as I said, exponentially by 25%. And that's almost a universal phenomenon. It's not just restricted to the Toronto and the area around Toronto. So the market will not stabilize until such time as the Bank of Canada gets the inflation rate under control, and it'll only do that by continuing to increase its benchmark rate. The bank has indicated that it is prepared to increase its benchmark rate as high as it needs to go to start the inflationary cycle downwards and ultimately to get inflation between the 2 to 3% that the bank is comfortable with. Until that happens, we're going to have a very, very slow resale market, as we have been experiencing over the last few months, and as August numbers clearly indicate happened in the month before. Early September numbers appear to indicate that we're going to have a similar, if not an even slower September than we did to August. And that's ironic because normally September tends to be a much more active month as we get through the summer holidays. There's no clear indication as to when inflation is going to be under control. It has started to turn down, but the bank was concerned that the turn down was primarily due to oil and gas prices coming down and not some of the other fundamental components that drive the Canadian Price Index. So hopefully If that happens and some of those indices start turning downwards, the bank may stall any future increases or maybe even start reducing its benchmark rate. If that happens, we will see an immediate resurgence in the real estate market. And of course, the reason for that is due to the underlying factors that were already there. Huge amount of demand, not enough supply, immigration moving into the Southern Ontario region, which is in turn increasing the demand and the need for more housing. So we'll keep our eyes on the inflation rate. We'll keep our eyes on how the bank responds to the inflation rate. We'll hope that the bank stalls increasing the benchmark rate. We'll even hope that the bank reduces its benchmark rate. And the moment that signal is given to the economy and to the housing market, it will pick up and it'll be as frenetic as it was during the height of the pandemic. So until we get the September report, please stay well, and I look forward to providing it to you when the data is available. Thank you.